Good morning and welcome to the weekend Join the Dot. Oh, have I got some dots to join for you? But then I've got them every day. And I hope you're seeing them because these are getting very big dots now with real significance. I have an absolutely fantastic must not miss video. Okay, it's 22 minutes, but you have to watch it. All right, otherwise you're not really investing the time you need to look after your money or to grow your money. 22 minutes, okay? So we start off today with George Gannon. Just a very brief mention of George Gannon. I will link his episode. AI bubble now worse than dot-com bubble. Well, I think we got that, haven't we? We got that. Okay, so the trading on margin, the trading into options, the participation in the stock market, the insider selling on the other side, everything is screaming risk. No reward, risk. Right, then we go on to our second piece, which is Eurodollar University. These will all link, all the dots will join. Oil. Oil supply now is exceeding demand quite considerably. Okay, and guess which countries are really showing that they don't need as much oil? Brazil, India, China. Brazil, India, China. Russia has its own oil, so we don't know the stats there. And South Africa is irrelevant. BRICS. Demand for goods, demand for industrial use is falling. Do not be fooled by the media and by the pro-BRICS lobby. Do not be fooled. They're in trouble. Okay, they're in trouble. So this piece from Eurodollar University talks about, what have I said so many times? Jobs, jobs, jobs. Exxon, Mobil, all the oil majors talking 20 to 25% cuts. As I've said to you, if they can't increase margins, if they can't increase price, if they can't see a hope for margins, they will cut jobs. And when they cut jobs, what happens to the economy? America, 68% based on consumption. What happens? It shrinks. No rocket science here, is there? Just joining dots. Right. So, also on that point, and this again reflects share prices, there will be a very significant curtailment of share buybacks by the oil companies. Well, of course they will. They haven't got the cash flow. So they'll cut back on buying back shares, which is one of the major things that's taken this bubble beyond the dot-com bubble. Okay, share buybacks. And yet insiders are selling into the share buybacks. How's that allowed? How is it allowed for a company to buy back its own shares from its own insiders who are selling? How's that allowed? I'll come on to integrity later. It's very important in the piece by Daniela Carboni, ITM Trading, and David Morgan. Very important. Integrity has gone. So what happens, even when the US launched the bombing raid on Iran, the price didn't go over 75. Now, historically, US bombs Iran, oil, 100, 120, 75. Couldn't get over it. So the only thing that can get the oil price any higher is a war. We'll come on to it. Join the dots. When all else fails, they go to war. Right, the third piece is this ITM trading link. Okay, and ITM are very good. There's two ladies there, Daniela, and I can't remember the other lady's name, but they're both very bright people. And they both point things out very clearly for people to understand. Okay, so this is the most powerful piece I've seen in a few weeks, actually. And it's David Morgan, who is a well-respected silver analyst and, in modern terms, we say guru. And he sees 10 times gains as deficits squeeze supplies. Now, we all know this. We've joined the dots before, haven't we? There are less supplies coming out of the ground than is needed. We know that. We know that we're producing something like 980 million ounces, so just shy of a billion, and we know we're using 1.2 billion. And we know that use is only going to go up because even though the world and the economy is slow, we are moving more towards the electronic age, the AI age, which consumes silver. Okay, it consumes silver. And the beautiful thing about silver, the beautiful thing, is that each product produced uses very little. Even an iPhone uses, I don't know, 1/10 of an ounce or something silly like that. So what it means is that the price does not destroy the price. In other words, when the price rises, it doesn't kill the demand because the demand can't be replaced. It can't be substituted. You have to have silver. And even if you're paying, I don't know, $70 rather than $30, okay, on 1/10 of an ounce, what's the difference? Yeah, $4. Does that affect the sale of an iPhone? No. $4. And they're going to have to absorb margin squeeze anyway, aren't they? Because demand's falling. Demand is falling. Consumption is falling. Jobs being lost. Jobs being threatened. People worried about their jobs. People with no money. Inflation. Real inflation. Shadow stats, 11%. Okay, are people getting 11% wage rises? No, they're losing, and losing. Join the dots, please, join the dots. Right, so into David Morgan's piece. Now this is critical to understand. It is the most powerful piece I've seen for some weeks. Okay, most powerful. 9 minutes in, David says everyone is in over their heads on stocks. Over their heads. And they are. We know that. We know we've got the most margin ever. We know we've got the most options ever. We know we've got the most participation ever. And we know we've got the most insider selling ever. Clues, 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 join the dots. So, what David says is historically, and this is right, stocks are the most negatively correlated with gold. But what have we seen? We've seen this stock boom, haven't we? But we've seen gold double. Stocks have gone up from maybe 6 to 6.8, 6.9, 15%. Gold has doubled. So it's not negatively correlated at the moment, but it is negatively correlated. So what's happening? What's happening? Simple. The people buying the gold are not the people, are they? They're not the public. They're the central banks. Who can see from the weaponisation of the dollar and the weaponisation of treasuries that you need a substitute reserve asset, tier 1 asset? And there's only one, gold. There's only one, gold. I think silver will be reclassified at some point, but not yet, not yet. A long way down the road yet, okay? So as stocks fall, so will gold rise. But it's different this time in as much as we've seen gold rise while stocks have risen, and I've just explained why. Central banks buying. And they ain't going to stop, are they? And as their economies, as we see from the oil supplies in Brazil, India, China, as they fall, the demand falls, their economy splutters, they'll want more gold. They won't want US treasuries and they won't want US dollars. They prefer gold. Okay, so it's very different this time. Central banks fear the weaponisation of dollars and treasuries. I've just mentioned that. So there is a need for gold. And also, a substitute for gold is silver, isn't it? And we're seeing it. We're seeing the weaponisation of silver as well, I think. I think we're seeing people take massive stocks in now. And you've got to think of the people who use silver a lot, the AI companies, the electronic companies, the phone companies, the car companies. They are all going to have to buy substantial amounts of silver to stock. Otherwise, they'd run out. They wouldn't have any. There'd be no supply for them. We know we've used up 250 million ounces every year for the last 4 years. We're running out. The exchanges have gone. They've got a bit left. I think London says 150 million ounces. Well, that's not even a half. It's just over a half year's supply. Or half year's deficit, not supply. Deficit. Okay? So when stocks tank, we will revert to the normal relationship. Gold will soar. And this is again, think of Greg Mannarino, think of all the others we've listened to, Eurodollar University, think of all the good guys, Maloney, Sheckman, everyone, think about it. Okay? Stocks fall, gold rises. Hence Mannarino, 8,000 Dow, 8,000 gold, 500 to 800 silver. I can see it. So what else to buy? What else is there to buy? When the stocks collapse, when everyone is absolutely over their head in stocks on margin trading. Now what happens to margin trading when the stocks start to fall? the margins will get ramped up massively, especially when they're dealing with the public. They won't give a damn. If they're dealing with institutions who give them massive amounts of business every day, they'll think twice about increasing the margin. But on the public, who cares? Who cares about the public? No. Okay, so the margins will be reduced massively. And bang, there goes your public buying. There goes the key buying that is keeping this index up now above where it got to with .com. Public buying the Mag 7. Okay, that's what's doing it. Remember, all the other shares, the 493, are no higher than 2022. It's the Mag 7 and it's about to pop. Okay, so David, 14 minutes 30 into his piece, talks about a weak hand shakeout where margins are raised very, very quickly. Okay, now here's the big part. Okay, and I haven't even talked about the silver price, but David is the expert on silver. He sees 10 times increase. He sees 10 times increase. I see 10 times increase. Even from here, 47, 10 times increase. Only we're still shy of Greg's minimum, 500 to 800, aren't we? So I see a 10x. From 19 to 23 minutes, this is the most powerful part of the video, and I really want you to watch this and watch it 2 or 3 times. From 19 to 23 minutes, David talks about integrity. Integrity has gone, okay? Equal treatment under the law has gone. Justice depends on either your politics or your wealth. Same in the UK, same in the US, same in Australia, Canada, New Zealand, all the countries of the West. And as I say, Russia and China, you don't need to talk about this, do you? There is no equal treatment under the law. Justice has gone. This is revolution stuff. Now, we hope it's going to be an extremely peaceful revolution. And we can see that in the UK, I think. We can see a peaceful revolution developing. And I have got a 4th link here, which is Nigel Farage, which is his reply to Keir Starmer's attack on anyone who thinks reform. Anyone. They're all far-right Nazis. No, they're not. They're British people who don't like the extreme left, which I think, as I say, draw a circle, not a flat line. All right, the world is round. It is not a flat world, is it? So if you go too far left on a flat line, what do? You fall off. If you go too far right, what do? Fall off? No, go round the circle. If you go too far left, you are far right by definition. That's where the far left, who think they're far left, are actually there. They're in the far right. They are now the Nazis. They are now the control freaks. They are now those who won't allow free speech. They are now those who won't give equal justice under the law. They have all the traits of fascism. Now, listen to David in this 19 to 23 minutes of this brilliant interview. Powerful interview. Okay? Powerful. Because this, as he says, this is what causes revolutions. And I'll link Farage's speech. Because what's been said in that speech is a rebuttal to attacking every single British person as a fascist. Other than those who are fascist, ironically. Okay? So his bottom line is we need to speak truth to power. And this is what this service is all about, isn't it? Truth. I've said it since the start. We cannot base any decisions, investment, lifestyle, anything, unless we base it on truth. For health, wealth, everything. You need the truth to make the right decisions. Okay? And what I've done here, I think this is just one of those pieces that you must watch. You must put away, file it, and watch it every week, every month, whatever suits you, but you must watch it. This is incredibly powerful and sums up the times. Nominally, it's talking about silver expanding tenfold. And I know that's what you're interested in. But please also be interested in the rest of this video. Daniela Carboni says at the end, this has shaken me to the core. This should shake anyone to the core who watches it and thinks it through and joins the dots. This should shake them to the core. This is where we are, and this is what we must protect against. Okay? So thank you very much for watching. please watch that video several times. 19 to 23 minutes is the key part, but if you want the build up, it's very relevant. Thank you very much.